everybody says, I need an SBA loan. Like it's just one thing, Matt.
Or they don't want an SBA loan. They're scared of SBA loans.
Yeah. So
I would say that might be more of that than anything else because they don't know the process. But let's go back to your original question.
No, I think that's good because really, SBA is like kind of an unknown thing. Some people act like it's the saving grace for all small businesses, and other times people are like super scared of it and never want to go into it. So we're trying to demystify it a little bit.
And they don't know what SBA is. Everybody goes, SBA makes the loan. Hold on, let's back up. So let's get into the two major types of SBA loans. There's the SBA 7A and there's the SBA 504.
What are the differences?
SBA 7A is made by banks. They're preferred lenders who approve the loan and get the government guarantee from the government, right? From SBA. They get the guarantee on that. The guarantee is up to like 85% guarantee of the loan. So you make $1 million loan, they're guaranteeing up to 85% of that. There's still the unguaranteed portion out there. So banks sell those often, typically on the Wall Street. There's a few banks that hold them onto their balance sheet. The majority they sell them off on the Wall Street, and they're used for 7A is one of the more popular ones. It's used out there for real estate, equipment, and even business financing. So blue sky, goodwill. It can be used for non-collateral. And that is made by the banks. The banks make the loan. You'll see the approval come from you'll see an E-Tran number come from SBA, but it's the bank making the loan. Then you have SBA 504. SBA 504 is actually a loan approved by SBA. That is used for equipment and real estate only. So there cannot be any blue sky for a 504 loan.
Okay.
They're made by the difference between the approval process is there's a CDC. There's 3 in this state.
And that's not like Center for Disease Control, right?
It's Community Development Corporation. They're the conduits in the SBA. So, and there's also the backup we have. Hit the microphone. We have the backup. We have a bank still needs to go through on this process. So the 504 is 50% bank, up to 50% bank of the loan, and then up to 40% SBA, or the other up to 10, as low as 10% for your down payment. So there's your 100%, right? And so the bank makes a first loan, a first lien position. Mm-hmm. They also make a second lien position, where the SBA is approving that second lien position. So the CDC gets it, they approve it through their committee, their underwriting, they submit it to SBA with all the documentation required, and the SBA then approves that. They come back, give the approval to the bank, and the bank then goes ahead and funds 2 loans. They have 2 loans in their book. They're conventional mortgage, and then they have a bridge loan. That bridge loan will be paid off by the SBA. The SBA will come back in months later and pay it off. If we're just talking about a straight refinance or purchase, it's usually about 3 months they come back and pay the bank off for that portion. So on that portion, you're paying interest only on the second lien position. The SBA comes and pays them off. Now you have 2 loans. You have a loan with the bank and you have a loan with SBA. The nice thing is those are 25-year fixed rates. They're printed once a month. The rates are printed once a month by the SBA, and those rates are right now and historically are lower than what you can get typically in the conventional world.
Right.
Those are fixed rates, where the 7A loans are typically variable rates. Most of those are prime plus a spread. There's a few banks who they hold them on their portfolio that will give you a different rate. They have their own index, however they determine. They can give you some fixed rate options.
Right.
Over the years, I've done some fixed rate options where they're 25-year fixed rate. Back in 21, we closed a loan that was 3.17 fixed for 25 years because that bank was SBA. They held it on their books. So you had a 25-year term, 25-year maturity, 25-year fixed rate. How could you beat it? Because most SBA 7As are variable rate quarterly. When whatever prime was at the end of the previous quarter, then it will adjust if the prime adjusted. If not, then your rate stays the same. Those are some of the big upfront nuances. Prepayments are different as well. So on a 7A, you have a 5-3-1. So 5% year 1, 3% year 2, 1% year 3, and then the prepayment penalty falls off. That's for anything over 15 years. Under 15 years, there's no prepayment penalty.
Okay.
On the 504, it's a 10-year prepayment penalty on the SBA's portion. You'll have whatever prepayment penalty is on the conventional first, but on the second with SBA, there's going to be a 10-year declining prepayment penalty. They'll just decline over the years, and that depends on the rate at the time. And it's not.
Is that generally like a 333, 222?
No, it declines by 1/10 every year.
Okay.
So it starts out, let's just say it starts out at 5%, and it goes on almost 4.5%, and it keeps sliding down.
Okay.
Those are the big differences. You also have, both of them have SBA guarantee fees that usually get rolled into the loan as the overall project cost. So those fees can be exorbitant. That's why some people back out and they go, oh my God, I don't want to do this. So the SBA's got a $50,000 guarantee fee. Well, you're a startup business or you're doing an asset class that most people don't want to lend at 80, 85, 90%, right? Those are nuances that people are like, well, hold on. Do you have more money down? Take the guarantee. And that's a percentage of the loan and depending on the loan amount too. There's different brackets for the guarantee fee.
So the big difference between the two, just trying to recap,
please,
is the blue sky portion, correct? That's the big difference.
You can't do that with 504, but you do that with 7A.
And just so everyone understands, blue sky, what would be an example of that?
The valuation of a business. That's the hard assets. Nothing I can go repossess tomorrow.
So if I'm buying something for $1 million and I have the property's worth $500K, that's part of the purchase. That remaining $500K, if there's no other equipment, would be the blue sky.
So recently, even gas stations. So gas stations have a going concern value, which is, here's the real estate value, here's the going concern value. The difference between the two is blue sky. They will only finance, if you're going through the 504, the real estate and hard assets. They're not going to do the going concern value, which can be significant depending on the cash flow of the business, right?
Right.
That's, the best way to look at it is if you're selling our business, it's going to be all blue sky. I don't have real estate that's coming with it. I'm not having equipment.
You don't have a bunch of equipment or assets like that.
That's the blue sky that goes into it. It's the goodwill. It's the value of the business. So that's where you need to use the 7A avenue for. When you're doing, and you can do construction for both of them. Construction is good for 7A. It's good for 504 as well. Thing about the nuance about the 504, you're not going to know your final rate until the construction's done and SBA comes and pays them off. So if you're doing a 12-month construction, this could be 12 to 15 months out before you know your SBA rate. So it could be floating variable, but it's similar to conventional, where most conventional loans are it's variable during construction, and whatever interest rates are at the end of construction is what it's going to be permed out to be. So it's not much different in that world.
And that plays into why the loans are a longer approval time in general too, because they're stress testing all of those things.
There's longer approval. There's, when you look at SBA, people go, I don't want to go SBA. It's a nightmare. It's a nightmare. You're like, it can be. If you did this by yourself, I've said, we've done a lot of SBA. And Lydia on our team and does all the processing on this. She goes, I don't know how anybody would ever get through this on their own, because the amount of documentation that's required is above and beyond a conventional loan. There is, especially when you go to the 504 route, there is so much 504 paperwork, and a lot of it is we'll complete it for the client always, and we just need their signature. But there was one deal where I had it all printed out in the boardroom in here, and there was probably 15, 16 different documents that I had to have two clients come in and sign. Their brothers doing a 504 loan, and so there's one document for each of them. And there's all this paperwork. You're like, and they need the wet signatures on those.
Yeah.
So you got to mail in the wet signatures.
And it's like the forms are almost repeats of other forms, but you have to have all of them to check all the boxes.
You have to know how to, a lot of this is CYA, you know? And so you have those nuances. So people think of the extra time it takes because there's extra scrutinization of where deposits come from, how's, your bank deposits on your statements. We need to have statements up to date on a consistent basis. Like when you go to close, I need a statement. I need to print all your history up to the time before you withdraw out the money for your down payment. Mm-hmm. Then I needed a statement after you withdraw out your money for your down payment to make sure this wasn't, borrowed funds from some other source that they didn't capture from illegal activity.
Oh yeah,
multiple reasons why they're looking at, but that scrutinization is very highly sensitive in the SBA world.
All those documents have to be 60 days within 60 days.
No,
is it 30 days?
You're talking about like other documents, but we're talking about just the bank statements. I need it right then and there, but there's Financials had to be within so many days of closing. So you always had to have updated financials from the buyer, seller in a transaction. You need to have all these things to be able to get the approval and get through the process. So having these things, sometimes you might start the process and go, I need updated financials again. I need these things again, because SBA can take a while. They scrutinize heavier on environmental stuff. So when you get your environmental done, you got to send it to the SBA for approval. They got to approve it. And there's only a few people working on phase 2s across the country for the SBA. So that slows things down. The approval process used to be a lot faster until the government shut down in October of last year for 504s. But then we shut down for 6 weeks. If we do about 100 loans on average in a year on 504s. So 6 weeks off, that's 600 roughly loans that are backed up. And now they're, at that time, beginning in January, they were down to about 20, they're at 25-ish days. Very long time, because you're already through this process. Now you got to wait another 25. Yeah, that's fun. They're down to about 7 business days now.
That's more reasonable.
One caveat, if you are a veteran or a military person, they've seen approvals come in with 1 day. With the administration that's in place, they push that as a high priority.
Interesting.
So a lot of nuances when it comes to that. There's also the 504 green. So we didn't quite mention, but there's a cap on SBA. So you can only have outstanding at one time up to $5 million.
So that means if I have 2 loans at $2.5 million each, that's it. I can't do any more.
You can't borrow again.
Until I've paid those off.
But if you do a 504 green, that restarts your clock on a different thing. You're allowed up to $5.5 million 3 times with a 504 green.
What does that mean exactly?
You got to go green. You have to reduce energy bills by a certain percentage. Typically, people do a change in lighting, or they add solar panels to the top. So we had one client, we did a 504 green. We said, oh, there's no way. He was out of his SBA capacity. We need to go SBA. So we went 504 green, and he just threw solar panels. Did solar panels in it. But you still have to have the results to show that you're reducing the energy cost by a certain percentage. So you had to have somebody come in and verify that beforehand, before you installed it, so you can get it approved. So there is, so you can do some of those. So you could have $5 million over here and then get $5.5 million green.
So $20 million total borrowed on the SBA.
21.5.
Yeah.
But there's also now, I think it's July 1st, they're coming out with it, is going to be, you can have up to $5 million 7(a), and you can have up to $5 million 504.
Not counting the green programs.
Correct. So they're realizing, that $5 million cap's been in for a while, and $5 million for a small business in certain asset classes really makes a difference.
Oh, yeah.
A lot of hotel owners went SBA before, gas stations, and those costs are starting to rise, and the
values of those properties are just...
and so it's not the same. You can't really use that same process anymore. And the reason people go to the 504 is because not a lot of lenders like those asset classes, the undesirables, we'll call them, gas stations, hotels, things like that, on their conventional portfolios without 35% down.
Right.
Where we were mentioning it's down to 10% down, but on special purpose ones, they can push it up to 20% down on SBA. But still, 20% down compared to 35 is a lot amount of money back in your pocket.
Especially on those asset classes.
And about that $5 million cap with SBA, so if you get a 504 loan, it's just called a $10 million purchase, and you're putting, it's called just 10% down for easier math here, you have a $5 million loan with the bank and a $4 million loan with SBA. So sometimes when they're trying to do a larger project amounts, you go to the 504 because we couldn't do all that 7A, but you could do a 504 because you're only going to have about $4 million with a 504.
Of that loan because of how the
bank's
two loans
got the
work.
Conventional on there on the first and the SBA second.
That makes sense.
One more nuance about the 7A that people really don't like, and I explained this in a different way, is 7A is they want to be fully collateralized. So this is, say you buy $1 million piece of real estate, you're putting 10% down, you're at $900,000. SBA already discounts that property by 15%. So in their eyes, it's only worth $850, regardless of what the appraisal says. They're just discounting at 15%. So you're at 850. So you have a shortfall of $50,000 roughly there, right?
Right.
They are required, according to SOP, Standard Operating Procedures of the SBA, to acquire any and all collateral available to make themselves 100% collateralized. Most people have a primary residence that are borrowing, commercially and especially SBA. They will they'll put a second lien on your primary residence to make up that shortfall. How I explain to clients is you're personally guaranteeing the loan. So with SBA, they're just more upfront. They're going to put the lien on up front to make sure they're fully collateralized. And if you default, they can be made whole that way. Where conventional, they don't do that. But if you default, guess what they're coming after? Your personal assets if they don't get made whole on the sale of the property. So once I explain it back like that, it's a little easier for people to go, oh, you're right. I'm like, yeah. So either way, you're
and it's a way of you accessing that equity in a way from your primary residence without ever actually having to tap it, because you're getting a lower down payment a lot of the times on the loan.
And I've seen them where there was no assets available, and or even if there was, they require life insurance, assignment of life insurance, to help bridge a gap somehow and overcome those obstacles. So there's different ways to do this, but if there is real estate collateral available, they will take it to make themselves 100% collateralized. And again, on that house, they're going to discount it by 15%. So if you have $1 million house, they're going to discount it by 15. It's 850 minus what you already owe on it. And that's all they can use for the extra equity to cover the shortfall.
Makes sense. So what's the biggest reason why they're slower? Is it just the approval process and
the paperwork? It's the paperwork out kazoo. I mean, it is the paperwork because the banks on the 7A, they're making the approval just like they would, and except for they have more scrutinization going through extra paperwork and additional requirements that hit the SOP, because what they want is that guarantee.
Right.
And what they want is, if the loan defaults, that guarantee does not get wiped away because they forgot to dot an I or cross a T on the paperwork. They lose their guarantee, they're at risk. And, they're selling these loans onto Wall Street, but they still have that guarantee risk back to them. If that guarantee got wiped away, they're going to have to pick it up.
Right.
And for them, that's where they make money. I mean, when they're selling these loans off on Wall Street, they're making a spread. That's why they do this. They're making a 4 to 6% spread.
Right.
I've purchased, in bond portfolios I manage, I've purchased SBA pools because it was floating rate. It fit with our portfolio, it fit with our balance sheet. So we bought them, but there was a decent premium on them because these banks are selling them off for a premium because I had a good spread.
Yeah.
So, I can understand. I understand the other side because I've purchased the loans. I've done those things. So, but SBA does take a little bit longer. The 504 takes longer because now you have the CDC involved and you have
that second round.
You have the SBA involved. So you have a longer path to get there. And that's why that's a little slower in that process. But, again, that's where we try to speed up the process on our end is we do all the paperwork for the client. They're not going to be waiting a week or 2 weeks for extra paperwork. We're on top of it like that to make sure we address this. If we have to drive to the client's house again to sign something, so we mail off the original, that's fine. We will do what it takes to get that over the hump because we don't want that to be slowed down.
No. And it's too good of an opportunity for a lot of small businesses to magnify their growth of their business with these loans to have them be scared of ever trying to do them.
The nice thing is usually with 7A, like I've had some clients, we've used 7A to purchase a property, and 3 years after their prepayment penalty falls off, the equity is there, business is doing good, it's sustainable, we can refinance that to conventional. Mm-hmm. And then they're out of the deal and they are able to acquire that property and do well.
Especially for those properties that you're buying that have a little bit of a build-up time. They're pro forma still, building a gas station, building a hotel, buying a new gas station.
You hit on some good pro forma, and the nice thing is SBA, some SBA lenders let you go projection-based.
Exactly.
Which gets into another question that probably people have. Well, SBA is the same. If I go to bank A versus bank B, it's the government behind the scenes. No, every lender has a different risk appetite and credit appetite for different deals inside their portfolio, even if they are selling them off. they still like certain things, and some will go, I'll do a projection-based deal. Some will say, I won't do a projection-based deal. Some will say, I like hotels. Some will say, we don't like hotels.
Yeah.
We don't like this, you know.
We love SBA, but we don't like gas stations.
We don't like veterinarians, or we love veterinarians, whatever it may be. They
Right.
have what they like and their appetite behind the scenes. So walking to two SBA lenders, you're going to get two different answers on their credit appetite, because even though they're like, well, it's the SBA loan, what's the difference? It is a big difference.
Big difference.
Because they still got to hold on guaranteed. They still have a risk out there. So they still have to manage their risk appetite. And what's their specialty? What are they good at? So that's one misnomer out there. Oh, the government's making the loan. No, not really.
No, they're just giving them the guidelines to follow, and it's up to the bank to follow them.
And you hit the guidelines, the SOP, the standard operating procedure. They have, if you go talk to two different lenders, you can get two different answers. It's like talking to attorneys.
It's
like
their
talking to
interpretation
CPAs.
of it.
It's their
Yeah.
interpretation of, and the risk they want to take within that interpretation is how they can manage the different things, the nuances that can come up in a transaction. So again, you're not going to get a straight, clear answer on two different SBA lenders and get the same answer.
And that's why having a relationship with a broker like us, someone that can actually go to a couple different ones, present it in their way, play them against each other to figure out where their interests are.
And there's a lot of SBA lenders out there that are not your traditional banks, like walking into their branch. There's some that have one or two branches, but they lend nationwide, or some are just not even branches. They are just a non-bank, non-traditional bank SBA lender. And so there is plenty of them out there, and those, they're going to be almost priced the same as the bank. So find the one that has a risk appetite, and we have those relationships, and we can send it to. I got dozens of way more than dozens, SBA lenders out there, and I know what their appetite is on certain deals, and I know who to send it to, and it helps us speed up that process of knowing, okay, here's 5 SBA lenders, but 3 don't like that type of deal, send it to those 2.
Right.
And there's more popping up every day. I swear to God.
So we've covered the big change that happened is coming up, which is the 10 million thing. What's the other big change that happened this year?
March 1st, it was you had to be a U.S. citizen. Everybody on the borrowing entity, everybody included in the loan, has to be a U.S. citizen before you could be a green card holder and get an SBA loan. No longer, and that's really. You had a deal. I had a deal come in this morning. They're like, I'm like, are you a U.S. citizen? Yeah. I'm like, then I started explaining to her, no, I'm a green card holder. I'm like, okay, well, that's going to be off the table for us. That option's completely off the table because you're a green card holder. You can't get an SBA loan like this.
Right.
Oh, that's the new administration, America first right now, right?
Yeah.
You're going to love it, hate it. It's just what the rules we have to play within.
And that's what makes it difficult, because those rules can kind of change, and doesn't have anything to do with us. But now the filter of lists of lenders we can go to for a project for that or for those people is way more limited.
Yeah, and then, they're always changing rules. There's other rules that we're not going to get into today on this podcast, but there's, you can do rent replacement. Some lenders let you do rent replacement, so you can only put 5% down. You can do partner buyouts with this, certain things like that with less money. You can do a seller carry back to get over the 10% equity requirement as long as you're still putting in 5%. There's so many nuances when it gets to certain circumstances that it's best just to call and ask the questions, and we will give you the answers on a specific detail of, hey, I'm looking at doing this. Well, what are you doing? What's your end goal? How do we bridge that gap? And let's think through outside the box. I mean, we've thought outside the box of SBA deals all the time, and there's ways to overcome that.
And my favorite thing about SBA deals is those deals that we've done where we really truly got it for only 10% down, how much that helped the client. Because a lot of times those clients were either paying a pretty hefty rent to rent their space, or something that was keeping them from really getting to that next level of success for their business. And this trust and guarantee from the government catapulted them forward.
Yeah, we did one SBA 504 for my chiropractic office that I go to, and literally their new office, been into it multiple times since, and it's so much nicer. They're able to expand their business, bring on more providers, and this helped catapult them up from where they currently were leasing from before. And so it's And they're able to do a 10% down compared to, if they would have done any other way, 20% down, they would not have been able to afford the space. So having these avenues really helps small businesses, and truly ones who employ most of the people across the country. The only time I've ran into an obstacle on an SBA deal, we had to switch it to USDA for a client. I would consider them a small business, but the amount of revenue they run through their company is high because they're a fuel supplier. When you're providing $4 or $5 worth of gallons of gas to people and you're pumping a lot of volume, you might not be a big business from employees, but you surpass the revenue marks.
Wow.
They're like, we can't do this. I'm like, did you see their margin on that? That margin's only a few pennies per gallon. You can see their margin's not much. You see the number of employees, but it's still the
They just sell a lot of
They're
fuel.
like 3 times the limit. You're like, but it's still not a big business. I mean, revenue looks great, but that's really not their real. I mean, it is real revenue from an accounting perspective, but that's
you
just
have costs that
the costs are almost the same as the revenue. Like, okay, fine. So there is some. That's not going to come up that often, but
No.
SBA is a good avenue for people. It is scary for people to hear when a realtor goes, "Oh, you're getting an SBA loan." On the other side of here realtors go, "Oh, we don't want that deal." So they'll try and talk their seller out of selling to the person that's going to get SBA financing. You're like, yeah, but this makes the most sense for the borrower and for the seller. This will get the transaction completed. You can go hold on for a while, but you kind of understand, like, oh, cool, you're going to benefit. If we're going to get the same price with this, why don't just somebody can go good avenue? Let them go the good avenue. Let them get it done.
Especially if you're buying a business that has the blue sky portion of it too, because outside of the 7A program, there's really not conventional lenders that will do that very often.
It is, but you're going to have to put some more money down.
And they're going to structure it weird. There's some banks that kind of almost make themselves partners with you to get around that. I've seen those, but it's just a mess. These are by far the cleanest options for people. And one big thing we did not cover: what qualifies it as an SBA loan? We said it's owner occupied.
Owner occupied, you need to be 51% or more of the building. If you're buying a business, you need to be operating the business. It's not for investors. So if I'm looking and going, oh, I got that building that's got 3 tenants in it, I don't need it, I can't go get 10% down. I need to occupy 51% of that building to qualify. And so people are like, oh, I can get SBA. I'm like, are you operating the businesses in there? What do you got going on? Like, we can't go that route if you're not operating the, it doesn't make sense that this is a pure investment play.
And that's why it's important when you're shopping for buildings. It's okay to look for ones that have other space that could be rented out to help make the building costs work out for you. But you have to make sure that the size or the spot you're going to use in the building is going to be 51%.
Yeah. That's a good catch on that, Ben.
Yeah,
we talked all about this SBA stuff, but we didn't talk about what qualifies
it. We kind of just jumped right in.
We figured everybody knew, but I know.
So to kind of wrap us up here, because we could go on this for a long time. What's your favorite deal we've closed that's been an SBA?
Favorite deal? Oh, yeah, put me in the spot. I would say my favorite deal has been a couple of hotels I helped a client buy years ago. This is probably 7 years ago. We helped them buy it. It was pre-COVID. We were working on it for a while. We had a few lenders in the deal, and they backed out because they're like, oh, one of the partners has a crappy looking hotel. This is how they're going to treat everything else. You're like, that's how they got started in this world. That's crap. That's a bad way to look at it. And so I was a Rolodex guy. I was like, I'm going to find something. I was not letting my client down. I was resilient, and we got the SBA 504 financing in place. They're able to buy the hotels. They make good money over the years, and they sold them for a nice profit too, just the last couple of years. So it was a win-win for them over the short term and long term. Mm-hmm. And it was just probably the resilience of really getting into the depth, especially after just being in business for a couple of years. It really helped us dive in and go, man, there's so many more SBA lenders than just your bank next door.
And why they're so different than each other too.
Yeah, and it helped open our eyes to the possibilities, how to assist clients to this, and the range of lenders out there, and having that bigger network of that.
Love it. Mine is that tortilla shop that we helped that guy finance.
Yes.
The cool part was he had been renting the location since before I was born, like 27 years or something like that at the time. And the owner came to him and was like, hey, I feel like I can't rent it to you anymore. I feel like you just need to buy it from me. And they figured out a price. And he was an older gentleman. He'd been running that business for a long time, and he definitely would have been able to get through that transaction without our help and getting it all done. And then where he's at now, he owns that building. It's helped with his family's legacy, a lot of those things that are setting his business up for that next generation. And
love it. Love taking care of them.
It's so cool. So we share this with you guys just to educate you a little bit more on the SBA. Hopefully they're not as scary, and give us a shot on your next SBA deal.
And if they are scary, still reach out, because we will help talk you through the deal, walk you through the deal. And like I said, on the SBA deals, we're holding your hand even more than we do on conventional. We still hold your hand through every transaction, but we understand the complexity and the nuances and the confusion that SBA deals can come up with. And we'll make sure we include everybody involved in the communications. We update your realtors and the sellers on every transaction, so this makes it a smoother transaction for everybody involved.
Agreed. Yeah, our value add for SBA deals is heavily felt. So thank you guys, and give us a like, follow, subscribe, shoot us a DM, and
don't forget the DMs.
We'll see you guys next week. Sounds
See
good.
you guys.